Hello traders and welcome to another video review. Today is Wednesday, October 25th, 2023. Let's find out what is going on the Forex economic calendar today. The most important event of today is of course the Bank of Canada interest rate decision. This event is scheduled for release at 4 p.m. The market participants expect the Bank of Canada to leave the interest rate at the level of 5%. So any movement here, up or down, any hike, any cut of the official rate will cause increased volatility on the Canadian dollar related pairs. So we will definitely take a look at the Canadian USD to the Canadian dollar pair for sure. What are the other very important events for today? Building permits data from the US is scheduled for release at 2 o'clock. New home sales from the US are scheduled for release at 4 o'clock as well. Crude oil inventories are scheduled for release at 4:30, and then we have a speech from the Jerome Powell, the Fed chairperson, at 10:30 generally. So those are the key events for today. Definitely worth to keeping an eye on. But in order to continue with our analysis, let's find out what is going on the technical on the chart, and do the technical analysis of the US dollar to the Canadian dollar. This is the US dollar to the Canadian dollar 4-hour chart. As you can see, the market is already positioning itself to the upside. Why? Because right now the rate is 1.3751, which means the next target for bulls is located at 1.3783, which is not that far away, only 30 pips. We have for sure some kind of a minor trend line support, or maybe even kind of a channel here. As you can see, we've been bouncing from both the trend line support and 100 periods moving average, and right now we are of course trading above the 50 periods moving average on a 4-hour chart. We broke above the last week high, 1.3740. Okay, so this internal intraday technical resistance has been violated, and now the target is of course 1.3783. There is still a room to the upside on the RSI. There is still a room to the upside on the chart as well, and we are going to test this level. What if there is a breakout higher? As you can see, if there is a breakout higher, right, then we will have the highest US dollar to the Canadian dollar rate since this is July already, and this is May, and this is, let's say, March 2023. So that's very important level. Eventually we can even locate the next target, for example, like in a form of the technical resistance, because there is a swing high at 1.3861 from the beginning of the March 2023. So the highest level might be made today in 9 months basically. Okay, so that's why this is very important to keep an eye on this level. It looks like the bulls want to break above it and then test another technical resistance. Because it is an old technical resistance, the breakout above will be even more significant, okay, than the usual breakout. So that's another reason to keep an eye on this level. Let's now take a look at the US euro to the Canadian dollar, a kind of a minor pair, and we are not that often analyzing this pair, but we got very straightforward downswing here from the highs of 1.4826 to 1.4160. Now this looks like the retracement of this movement to the downside. Let's see at what level are we these days. So that's the swing high, This is the 61% of the retracement, roughly around here. And as you can see, we broke above this level, 1.4572, and made a new high. We broke above it and made a new high at 1.4617. So retracements, all of the important retracement on the euro card had been violated. So now we can rely only on the technical levels, right? So what do we have here? For sure, we got the technical support 1.4487. Then we got the technical resistance. The technical resistance is located roughly around 1.4632. This is the low from the end of the August 2023, and of course the target, the ultimate target for the bulls is located between 1.4804 1.4826. So this is the very narrow zone here. Let's just zoom in a little bit. As you can see, this movement here looks like it's corrective because it looks like it was made in 3 waves only. So if we take our Elliott wave pattern, ABC pattern tool, then you can see it clearly that this is the ABC correction. Looks like a zigzag 5-3-5. So what I'm wondering is whether this market moved towards this wave C high, but if there is any relationship in a Fibonacci measurements here, and it looks like we do not quite have this kind of a relationship. 0.78 is the nearest number I can get from my Fibonacci tool. So that means that length of the wave C is 78% of the length of the wave A. So it's not that brilliant, because usually we go 1-to-1, which means the length of the wave C is equal to the length of the wave A, and that's only is possible at the level of 1.4673 basically, right? So there is still some room to the upside that is waiting to be covered, right? So let me just move. Can I move it? Yes, there you go. This is the target. Now, momentum wise, we are still very strong. We are on the bullish side. Momentum is strong and positive. However, as you can see, we are coming off extremely overbought market conditions. Right now we are hovering roughly around the level of 60. But there is still a chance for this market to complete this pullback towards the 50 periods moving average and then continue to the upside, possibly towards the horizontal technical resistance or Fibonacci target. So we target of 100%. So 1.4673, 1.4632. It looks like 40 pips range for the euro CAD to be covered soon. And last but not least, let's take a look at oil, because as you can see, we got the data from the crude oil stock, and we can clearly see that the oil is rapidly going down. It even left a gap here. So it looks like we will, from this lows here to this, let's say to this high, we got the to the other low, we got the short-term trend line, and as you can see, we are testing this trend line support right now. Let me just zoom in a little bit here. There you go. Just to zoom in here in order to show you guys this this gap here. All right, so gap is roughly between 88.03, let's say 89.69. All right, so this movement to the upside, as we were talking about, this movement to the upside, and this movement is of course corrective. So this is the direction. Okay, so this is the direction. What I mean is that this might be wave 1 or wave A. Let's start with wave A because it will be easier, right, to analyze. This is the wave A, this is wave B. We are waiting for the development of the wave C to the downside, possibly towards the level of, let me just grab my horizontal line, possibly towards the level of 77.62. 77.62 is the next major technical support, and this is the target for the wave C. Any violation of the short-term trend line support would be considered bearish, and most likely this movement to the downside would only accelerate, right? Momentum wise, we just hit the level of 30, which means the market conditions are now extremely oversold, which means that we might see some sort of the bounce to the upside or pullback from the oversold conditions. The nearest technical resistance is roughly around the level of 85.08, somewhere there. Alright, so we should pay attention to this level. So the next path might be bounce from the trend line. Bounce is capped at the 85.3, and then we return to the down move, breaking the trend line and developing the wave C to the downside. That's the outlook for the crude oil for the coming days. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.